Like, let's say you identified a site, you bought it, it'll take you 2 or 3 years just to be able to get that approved by the city. And
Hmm.
out in the county that I bought in, which New Braunfels is in, it takes about 2 months.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time.
Welcome, everyone, to Alt Investing Made Easy. Today, we're here with our new client and becoming friend, Alec McElhinny with Land Play. He's here to tell us about his company, Land Play, and his experience with in commercial real estate investing and a little bit about a live deal that he has right now. So welcome, Alec. Thanks for joining us today.
Yeah, absolutely. Thanks for having me.
Hey, Alec, it's great to have you on. We always get extra enthusiastic whenever we have a law firm client on as a guest, and you're for sure that. And you have an interesting commercial real estate development in New Braunfels, Texas. If people don't know where that is, you're going to tell us more about that. But, Alec, we always like to start out with hearing a little bit about your background and tell us about how you got into commercial real estate development. So, just leave it open ended. Where did you grow up and your background, and just let you kind of tell a little bit of your story.
Awesome. Yeah. I grew up mostly in Minnesota. My family moved up there when I was around 12, so I went to high school and college at the up in Minnesota University of Minnesota. Graduated with a math degree and with a focus in actuarial science, and graduated during COVID and was working as an actuary for the first time remote. And it was just so man, it was just so difficult, like trying to work remotely and like trying to learn like these new like heavy duty models. And yeah, it was honestly like very boring for me too. During this time, I'd like pull out my calculator and there's something called a forward annuity equation in actuarial science, or just time value money. And I'd calculate, okay, if I save up, $20,000 a year at this interest rate in the stock market, let's say 7%, what would my net worth be 30, 40 years down the line? And I couldn't find a number that made sense for me. I couldn't find a number, amount that I could save that made sense working the job I was. And I started playing around with that formula and figured out pretty quick that the biggest changer in that formula is the interest rate, the rate of return that you can get. If I jump that interest rate of return up to 12%, I can get to my retirement amount a lot quicker. If it's to 20%, I can get there a lot quicker.
You know, Alec, you're not the first person I've met who studied actuarial to become an actuary who ended up pivoting after a while. I guess by nature, you can, part of all the calculations you do, you figure out maybe quicker than some of the rest of us that the numbers aren't adding up as quickly as you might like to get towards a final number for retirement. So it's actually, wonderful to hear that story is still alive.
Yeah.
Wow, that's great. So then you have moved on now to really form your own venture. What was kind of your process in leaving a 9 to 5 job and moving over to forming your own company?
Yeah. So during college, I'd listen to Bigger Pockets, and a couple other entrepreneurial podcasts just because I was interested. I didn't think I would be that'd be something I'd end up doing, but um, I've once I figured out like the interest rate is the quickest thing to change how quick you can get to your retirement goals. I figured out if you buy a house with what's called an FHA loan, so you go low money down, like I think it's at 3.5% now, but it'll fluctuate between like 0 to 5%. You can get a house for very low money down and essentially get a very high IRR because of that. If housing prices increase at 3.5% and you bought it at 3.5% down, you're already making your money back in a year, essentially. That with cash flow and principal pay down, I figured, okay, I could probably get a 30, 40% IRR buying houses. And then I met a guy, so I bought my first house, a duplex, and was looking to buy more houses. And I met a guy off of Bigger Pockets who was flipping warehouses. And I could not believe that you could do something like this. And he'd flip like a few warehouses each month. And I just kept meeting more people who did a similar thing. They'd buy, and they call it value add. They'd buy a warehouse that's a little rundown. They'd fix it up a little bit and then re-tenant it. And they'd be able to sell it for a higher amount.
Yeah, that's a classic model, isn't it, Sarah? We talked about that just this morning.
Yeah, we did. And you know what, Alec, what's interesting, because I want you to have the chance to, when we start talking about land plays specifically and the term flex industrial, I think, it's something that will be really interesting for people to hear more about, because I do think industrial space is often thought of as either you have warehouses to flip or you have these big developments where you need big anchor tenants and whatnot. So you kind of have moved into, from there, you've moved into what you call industrial flex. Do you want to maybe go down that path and talk about that?
Yeah, absolutely. So, after learning you could buy what's called value add properties, bought my first industrial building with some guys up in Minnesota. And I then met a guy who, I noticed like if you subdivide the spaces, you can rent them out for more. And that's something that sticks with me. I'm like, okay, so if I do the smaller bays versus the bigger bay stuff, I can get more rent. I met a guy in South Carolina who was building small bay flex. A warehouse with a bay size of like 2,000 square feet, let's say. And I looked at the numbers on them and I'm like, this makes a lot of sense. This is a great business decision. And it was during a time where interest rates were coming up. It was harder to find value add projects. And a lot of the properties were inflating and you could still build for a decent price. So I'm like, I'll jump into FlexSpace.
So do you want to, so how did you make your journey to Texas then? Because you are here in Austin now.
Yeah, I've always wanted to move to Austin. I first came out here for a leadership conference actually, and met a lot of cool people. And this was about last year. And I was flying back and forth a lot from here in DC, and that's where I was at the time. And I'm still back and forth from DC, but ended up getting a spot out here last year. And I really like how people do business out here. And I really like there's a lot of real estate opportunities out here, especially on the 35 corridor going from Austin to San Antonio.
Yeah, exactly.
Yeah,
well, sorry, go ahead,
Go
Roland.
ahead, Sarah. Yeah, no, go ahead.
Oh, I was going to say, which would lead us into talking about your current project, but maybe Roland had something to add first.
Oh, no, that was it. I just think that we're really blessed to be here in Texas, Sarah. Just it's such a huge part of the economy, and it's been growing, and not just oil and gas, but lots of other sectors. And as we were talking before we started recording earlier, we just kind of noted that the area between Austin and San Antonio is almost one continuous urban mass now. And I remember, I've got the joke that I've been practicing law since the 1900s, so it dates me a little bit. But, driving down back and forth from Austin and San Antonio when I was little was totally different than what it is now. And it's just interesting to note. But, some people, if you've recently moved here from California, you might wonder, where is New Braunfels, Texas?
Yeah. So New Braunfels is like right between San Antonio and Austin. It's right in the center of all the growth that's happening on that 35 corridor. And this property specifically, it's right outside of New Braunfels. It's in the county. So it's very quick to develop. I try to target counties that are like very quick to develop. If you, let's say, bought in the city of Austin, it could take 2 or 3 years. Like, let's say you identified a site, you bought it, it'll take you 2 or 3 years just to be able to get that approved by the city. And out in the county that I bought in, which New Braunfels is in, it takes about 2 months.
Oh, wow.
It's a very, very big time saver, and it's better for investors too. If an investor puts money in a project that might not be approved, and it could be 2 or 3 years till they find that out, versus they put their money in and they know it's going to be approved. It's just a really big difference.
That's kind of a win-win difference right there. Win-loser. Yeah.
You know, and it's funny, Sarah, I just would note that while Sarah and I live in Austin, Alex in Austin as well, but so few of our clients really do deals specifically in Austin. And Alec, you make the note. I don't want to make any enemies at the city of Austin, but just it's a classic. I don't think that it's any secret really among the people that are knowledgeable about commercial real estate and real estate in Austin generally, is that the permitting process can be very, very lengthy. And you mentioned uncertain as well. So if it were certain that we're going to be granted at the end of the 2 year, you could manage for that risk. But I guess in some instances, you might have to wait for that time period to find out, well, we can't do the deal anymore.
Yep.
Yeah. So why don't we just for our audience, make it clear. So Alec, we've heard a little bit about your background. I think it's really cool that when you were pretty young, you pivoted away from something that you could see wasn't making numerical sense. That takes a lot of courage, especially when you've just gone through university and worked really hard and, feel like you're starting this certain professional life, and then it changes. Although I'm sure all the skills you have are, bring to the commercial real estate space. So then LandPlay as a company, is that a continuation of the projects you've done in other states? Now you're here in Texas and you have a specific project for LandPlay. Do you want to show us some of the information about that, and we'll talk specifically about your deal?
Yeah, absolutely. Let me share my screen.
This is great, Sarah. We told Alec before, we've gotten feedback about how we need more graphics, more.
Yeah.
So Alec is really helping us achieve our.
Yeah, and while he's getting set up, I just make a note for anybody that's not from Texas who hasn't really tuned into what it means to be part of the I-35 corridor. I-35 is, one of the federal interstates that goes through the entire country, and it goes, from very far south all the way up through all of Texas, and there are major cities on there, Austin, then you get to Dallas. And so technically the I-35 corridor covers, I think they say Sherman all the way down to San Antonio. It's expected to be ripe and for development. It's probably a 300 to 400 mile stretch of one major interstate. And then of course, I-35 continues up through the Midwest and, until it finishes. So.
And specifically, like between San Antonio and Austin, I'd Google this to fact check me, but I think there's around like 1.5 million to 2.5 million people moving here, like within that corridor in the next 10 years.
Exactly.
And
yeah.
There's so much growth coming. You're protected by the growth. If you build in an area that might not be great now, it will be great in 5 years.
Yeah. And that's a secret to Austin's real estate journey, isn't it? Because Austin was kind of a sleepy university town with the Texas capital here. Then when tech came, the tech-related industry all of a sudden sprung to life. And so before that, there wasn't really a way for Austin to be a major hub for much, because it's not an ideal location for shipping goods to and from places, right? Like Dallas is, or Houston is. Dallas has a major airport and Houston has a major port. So I do think, though, that Austin has now come, and now it's the fastest growing part of Texas, the greater Austin area, I should say, because arguably one day New Braunfels will be considered part of the greater Austin, San Antonio area, probably.
Yep.
So I think it's probably not dissimilar to what's happened in other major cities in the country, where there are actually two big cities near each other and they become one greater metroplex. Dallas, Fort Worth like that, and I think different cities in different parts of the country.
Okay, well, we see your presentation up, Alex. So just please take it away. Tell us about your new project.
Awesome. So this is the OM for the new Braunfels deal. And I'm going to start out just explain what FlexSpace is, just for people who aren't familiar. So FlexSpace is just small bay industrial, and it's they call it FlexSpace because it has a very flexible use. You can use it for an office tenant, a retail tenant, or an industrial tenant, and you can kind of build the inside to match whatever your tenant needs. It's I would call it a pretty recession-proof asset, just because let's say the market crashes a little bit, your retailers are going to move in there, your office tenants are going to move in there, and then a lot of industrial is pretty recession-proof. I like to build in markets where there's low vacancy, so we can lease it up very quick and start getting returns for investors quickly, like a short development timeline. Like counties where you can get things approved very quickly. FlexSpace, on average, you can put up pretty quick, about 4 months, and I put 4 to 6 months to be conservative, but it doesn't take very long to put a metal building up. A lot of FlexSpace is they call it prefabricated metal. So it's like just think of a giant Lego set that they ship over to your site, and then you just have metal rectors put up. They just follow instructions like you would like a Lego set. It's a lot easier to build than a house. A house has a lot of moving parts and a lot of complicated things. This is just like a metal shell. So it's less things can go wrong building this. And there's a lot of profit margins for this right now, especially if you GC the projects yourself. There's a lot of ways to save capital there. My plan for this specific project is to build out in 2 phases and try to target to refinance investors out after 24 months after phase 2 is up. And this is a small map of North New Braunfels right here. There's a giant subdevelopment coming in. It's called the Mayfair development. Our site is if you see that red here, that's where our site is. They're putting a Costco across the street, a high school. They're putting 1,000 homes back here. I think around 6,000 homes just here. An academy, a medical office, just like a bunch of stuff they're putting here. So this will be the center of town pretty soon. This is all grass fields right now. They're putting up some homes here and here, and they're putting up a high school here, but it's a lot of grass fields. And within 5 years from now, it's going to be kind of like a new town center. This is
you're right in the middle. It's very, very obvious that you've got a great location.
Yeah. Yep. It's a great location. And it's right on 35. So you have, I don't know how many cars are going by, but let's say like 200,000 cars going by each day. You could probably fact check that, but this is just a conceptual. A conceptual is just a layout plan that works for the site that my architect made. And you can see that I have around 10 buildings going up, 10, 12,000 square foot buildings. And then I'll have some outside storage yard. And that I see a lot of people putting up FlexSpace, but not a lot of people leaving yard for their tenants. And it kind of protects the product because you don't want to build something that's overbuilt. 2 ways that I'm protecting against building an potentially overbuilt asset is building on 35, which there aren't any flex spaces on 35, and then giving an outside storage lot. Tenants will pay premium for that, and these will rent up a lot quicker. And you're not competing with traditional flex space because you're offering a yard. Yeah, I'm offering investors a minimum of $50K, a 12% preferred return, and we're going to target a 22% IRR. And if you remember, when I was talking about time value of money, IRR is basically how quick your money grows. You can kind of replace that with like the stock market grows at a 7% rate. If you can replace that 7% with a 22% return, your money will grow a lot quicker. A lot quicker.
Yeah, just to note that the IRR has the time component built into it, right?
Yep. So let's say you put $1 in right now. Let's say we exit in a year, that'll be $1.20 in a year from now. And that's what we're targeting.
Well, that's real healthy, and I think that that's appropriate. Most of the people that we talk to, this is not a risk-free deal, but we like to talk about commercial real estate because at the end there's always a patch of dirt underneath everything, but there's some risk in this, and you've told us ways that you're mitigating the risk, and to the extent that there is risk, then that's a healthy return for sure. I think if that's a target, then it's appropriate and I would think achievable as well.
Yeah, very achievable. And I'm just kind of explaining the product a little bit more here for this project. We're doing 18-foot clear height. You want to have a clear height over 16 feet because your tenants sometimes want to stack pallets and they want to have space to store. And if it's too short, that leaves out a lot of tenants and you're going to lease out the product for a lot less and get less quality tenants. So we're getting the best of the best tenants. The building size currently, we're projecting at around 114,000 square feet. That's plus or minus some, just depending on the layout of the site, and that'll be determined in the next couple of months with civil engineering. 2.7 acre outside storage lot. That's what we're targeting for rents, and that's a very conservative amount. We think it's going to be closer to 22.
Want to tell us what N means?
Yes. Oh my goodness. I cannot believe I'm talking about commercial real estate and bring up triple net. So a triple net lease is, it's the best type of lease. It's one of the best type of leases you can get. It essentially means, so let's say you're renting out a house, your tenant's going to pay you rent. They're paying gross rent. A triple net lease, the tenant will pay, they'll pay what's called a base rent, so rent that you're guaranteed, and then they'll pay rent for insurance, taxes, and maintenance of the building. And that's a variable cost that you don't have to worry about. When you get a house, your taxes might go up, and you're gonna have to eat that burden. In industrial real estate, the tenant will eat that burden. And then this is just a projection for the site. Nothing too exciting. And this is just a potential development schedule. It's not perfect, and we'll have a more updated one once we get closer to doing some site work.
Yeah, and Alec, one thought I had is something that we can mention to people that are looking at AIM as our podcast here, Alt Investing Made Easy. We try to give investors some education. And what's important to note here is that these are projections, and nobody should ever take these as guarantees. You've made good faith projections. It can't be just, making things up out of thin air. Yep. But for sure there are no guarantees, but you try to manage, and like this is a really great example. You're showing a range of the potential cap rates at an exit, right?
Yep.
And so then you can say, well, hey, Alec, how did you come up with this range, and why is it an appropriate range? And you can kind of defend your projections, and then we poke holes in that, and the investor objections, whatever. But it's important to note that at this point, this is it's a pro forma, which means having to do with the future, and nobody has a crystal ball. Nobody can see into the future with certainty, but we just make projections and try to, it's a very, very good educated guess. It's just not spitballing things. So yeah, that was one question that just came to my mind, the basis for the cap rates.
Yep. And that's exactly right. We don't have a crystal ball. We don't know what's going to happen with the tariffs coming, or how real estate will respond. What we can say is hey, we're seeing our neighbors get rents of $18 a foot, and we're seeing buildings being sold at 7.5 cap. Let's just make it more conservative, and then let's show that to our investors. Like, hey, if we take off maybe a couple dollars of what our neighbors are getting, and maybe have a higher cap rate, just so that they're extra safe.
Makes a lot of sense.
And just some ways that land play saves money. So we source metal buildings from across the U.S. to find the best metal building prices. And this is such a funny little industry and a little quirk that goes with it. If you call a metal building factory, they'll tell you a metal building will cost $18 a foot, for example. But if you start doing some digging, you start seeing what steel costs and the man hours to build a metal building like this. You'll see that you can get them for a lot cheaper, and that's the work that we do. We negotiate and we source really high quality metal buildings for a good price and a lot cheaper than most people can get them. We can factory import a lot of things from Eastern Europe or Vietnam. And with tariffs, that will go up a little bit, but so if you can get windows for 30 cents on dollar out in, let's say, Poland, 25% increase on 30% isn't all too much. You're talking almost 40 cents on dollar there. So it's a great deal. We find subcontractors that we trust. A lot of people just find GCs and will just trust a GC. We go out and we interview the subcontractors to make sure that they're doing really good work. And then we find the best brokers in town to work with. Because a big project like this, you'll see vacant buildings, vacant industrial buildings or vacant retail buildings in Austin in areas that they shouldn't be vacant. And it's because they have an in-house broker that doesn't answer their phone. Like I've called them before and I can't even get a hold of them. It's like, how can you get a tenant if you're not answering your phone? So we find the absolute best brokers to lease us out.
Well, I like that. So we've got operational control. You're general contracting this yourself with respect to the construction development, but you're not presuming that you can cover the services needed to lease it up. And I think that makes sense to me because it's, so much of the things that you can manage or the costs that are going into it. And then of course you've got to lease it, but play to your strengths and, don't presume that, well, we'll just lease it up as well. We built it and we'll lease it. I guess some people might be able to do that, but I think you've seen that, where your strengths are.
Yep.
Yeah, it sounds like it also gives you flexibility, doesn't it? If you've done a project like this in another part of the country, and if there are other parts of the country that you could do more projects like this, if you develop a local network of brokers to help you, then you can focus on building the project and dealing with just the contracting side of things. That makes a lot of sense.
Yep.
I mean, I just, we haven't ever analyzed this, Roland, but I suspect that, people we have who come on and promote their deals who do the brokerage probably have been around these parts for a while or come from families that are established in Central Texas and have their own network already set up that way.
Yeah, I don't know. I think it's good no matter what that you're deliberate, you're intentional about it, and then also, Alec, you made the point that I think some people can overestimate their abilities, and whenever I hear somebody saying, we believe that it's best to outsource this function, you've made a evaluation of the right operational decision there, and that's the most important thing, and so but it's a good distinction to be making.
Yep.
Well, I see on this slide how we're different from other flex. You said that there aren't any other flex spaces along 35, so I think that's one way you're very unique.
There are two other projects in this area that are on 35 that are, one's an 8,000 square foot building and one's a 12,000 square foot building, and they're both getting very high rents and won't be as nice of product as what we're making. I feel very confident that, you can't find flex space on 35 that's vacant. You just can't find it. So,
yeah.
And another thing that we had is we HVAC the warehouse part. and a lot of developers don't. They'll either not put any HVAC, or they'll just HVAC the office, and it's just another way to distinguish the product, and you can get $1 to $2.50 a foot more for rent for doing that, for something that doesn't honestly cost that much.
And by HVAC, you mean heating, vents, and AC?
Yeah,
What that stands for?
We'll put
Yeah.
a AC in the warehouse.
Yeah.
And then just something I brought up again. We're combining a outside storage and a retail flex component to this. So this is almost 3 different type of products in one. So just another way to distinguish the product. And this is me, and this is my partner Forrest on the project.
So, Alec, we can, I guess, set out some links for how to contact you, how to contact Forrest, or we'll put all of that in the show notes, so you can make sure you share the details exactly of how you want to be reached. Oftentimes we put people's LinkedIn. But I will say that it's really nice to have you present this as a presentation, especially because your presentation is very clear. So it'll be nice to see how well received that is. And, just remind me again, or maybe just share this with our viewers. What is the total amount you're looking to raise, and by when?
Yeah, we're looking to raise $4.5 million ideally by the end of August. And then we're looking to start construction end of September, beginning of October.
So I just want to make an observation, because we do work with a lot of different people on different kinds of projects. You plan ahead, because, oftentimes we find out, the week before closing, that there's some urgent legal documentation that needs to be prepared for the offering, that the offerings, needs to go now. And, and so the mere fact that you're preparing so far in advance, I think, says a lot to the attention to detail and the deliberate nature that you've demonstrated here, showing us your investment.
Awesome. Thank you. Appreciate you.
Yeah.
Okay,
Roland, we haven't asked the personal question yet. Should we go there now?
Oh yeah, no, absolutely. Yeah, for sure.
So, Alec, just to make things a little more personal, because investors who might watch this would maybe want to get to know Alec a little bit. And so, what is it that keeps you going? We've asked the question of others, especially young people, and I don't mean that in any kind of a bad way, but different generation than somebody in their 50s. What is it that keeps you going in terms of, I'm sure it's busy, and I don't know if you have a girlfriend, wife, partner, children, anything, but some people have a whole life philosophy that they follow to help them manage being in commercial real estate.
Yeah. I don't have a why or a purpose necessarily. Maybe I'll find that one day, but I just remember graduating college and meeting people who were just crushing it in real estate. Like they'd make millions a year, and how free they felt, and like how they felt like they had control in their life, and they could grow big companies. And I want to give that to other people. I want other people to have a taste of that, because I had a taste of that. I want people to start companies. I want people to get into development, and I want people to have the freedom to live the life that they want. Well,
sir, I hear benevolence in that.
Yeah.
And maybe you don't have a why necessarily, Alex, but you have a consideration for other people, and you recognize the value of this path, this career path in developing research, commercial real estate. And then you immediately say, I want to share that with other people. And I think that's a really noble thing. Sarah and I talk about this, how we connect with what we do as attorneys, and personally, the meaning that I derive is somehow, being your legal secretary and helping you in that process, where you have this benevolence that you want to create value for other people. You want to give people a taste of that freedom that you tasted.
Yeah.
Man, that makes me feel great, that I'm really contributing to something, that this is about making money, but you do have a why. And it's easier for for people with kids and spouses and, whatever later on in life to really point at those things. But I hear you saying that you do have the why of trying to spread benevolence, honestly.
Yeah, I think entrepreneurship is so cool, and we live in such a great country, and we can build amazing things, and I want everybody to experience that. So
Yeah, that's great.
Yeah, that's been a theme again and again with us, Sarah, is democratization of capital. And, there's so many things, not wanting to get political, but there are things that we can complain about for sure in our government. But I think that the securities laws, the way that they're set up and allowing for financing deals like this and many others that we talk about on Alt Investing Made Easy, Sarah's got tons of experience working abroad. And whenever we talk about her experiences, she's like, I can't believe that you can do that in the U.S. because I have so much experience working in jurisdictions where the ability to form capital and create companies and start businesses is just dramatically. Yeah. So, it is, I am thankful of the securities laws in the United States. I'm a patriot because of that, because, it does really facilitate the creation of capital or creation of value, like what we're talking about.
Yeah. Well, Alec, thanks so much for joining us today. And also, it's just been lovely working with you. Thanks for being a client, and we look forward to supporting you in the future and helping you promote more deals also. And is there any last thing you want to add, or?
I wanted to shout out to you guys. You guys were incredible.
Thanks.
So Rollin and Sarah can get you guys a PPM like within a week or two. It's insane. Like most people take like 6 to 8 weeks. How quick they respond is just phenomenal. I'm not always the easiest person to work with, and they were just so patient with me. So I really appreciate you guys. And yeah, just very thankful. And I was just talking to them earlier today. Like I have a couple more deals coming. I'm just really excited to partner with. So
great.
Well, thanks, Alec. And
thank you.
We really appreciate that. It's just the nature of the practice a lot of times, just like what Sarah was saying with commercial real estate. A lot of times there's a race to close. And so to be present, to be good attorneys to our clients, we have to be responsive to them. But we really appreciate the shout out. We're not attorneys without clients. And so we appreciate, it's a partnership with you.
Yeah.
Well, that seems like a good place to wrap up. Sarah, what do you think?
Yeah. So, Alec, thank you so much for joining us. And to everyone, thanks for joining us today on this episode of Alt Investing Made Easy. If you like this episode, please like and subscribe to our YouTube channel.
And remember, everyone, take aim with your alternative investing strategies.
See you next time.